Hi guys, just a reminder that the information that we present in this video is for your education only. Trading is very risky, so you need to understand your risk and understand that disclaimer. Now, I noticed a fairly bullish pattern in oil from last night's trading in the US, and here we're looking at an oil ETF that I've already taught you about in a few lessons in the past. And let me just talk through what I can see here. The first thing I noticed down here where we can see a pivot, which is this low, and this low occurred on the 18th of March. Look at the RSI indicator, it's right down here. You can see it's very oversold. So that was the sort of first indication that, indicated to me that we were going to get some strength, a pullback, I guess, or some buying pressure back in oil. And you can see from that point, the price of oil has increased. And what I like to look for after that is I wait for a pullback. And you can see that pullback has occurred only a couple of days ago. So let me just mark that on the chart so you know what I'm talking about when I say pullback. So we've had a fairly strong move up here. Let me also make this a little bit bigger for you so you can see. And now from that point on, we've had a pullback. Now, back to this level, and then you can see from that pullback we're now starting to get some more buying pressure. Okay, now I've measured this pullback, it's about 50%. Okay, so from this initial move up, the market has retraced around 50%, and now we can see it's starting to move up fairly strong. Now from here I would expect another 10% move, so another maybe $1.80 in this position up to around this $20 level, which actually would be the next sort of high, the next level of resistance is around this level. So it's not, I'm not making any sort of unreasonable forecast to say that USO could go back up to its previous highs around this $20 level. Now, I want to actually use a different instrument to trade this opportunity because there's another ETF that actually moves a lot faster. So I want to take advantage of a much faster move. Now, of course, that means if the market goes against us, then it also means it's going to move against us a lot faster as well. Now, that instrument that I want to look at is actually DIG. You can see, if I'm just going to click over to the DIG chart. It's another ETF, but it moves, I think from memory, you might have to do some reading up on this. I think it moves twice the speed of oil. Okay, I have spoken about this in the past, so go back and look up DIG, do a search in the material that you have access to. Now, same sort of pattern, we can see a strong move up for the last couple of weeks. We can see right now, let me make this bigger again and so you can see this. Right now we can see a very strong move just in last night's trading. So again, I'd expect a move up around potentially 10% from this level, so up around this $60 mark. And again, previous resistance is, you can see here, is back around that sort of $58 mark. So it's not unreasonable to put in a prognosis that we could see a move back up to around these levels, maybe 58, 59, or maybe even up to 60. Okay, so I went ahead and I found an options trade that we're going to talk about in a moment, but what I would expect is a fairly quick, rapid move up to these levels with this fairly strong bar. Now let's have a look at volume as well. You can see on that bar, volume was above average, so a fairly strong move with some strong volume as well. So we could see another couple of very quick 3-4 bars up quickly into this next level of resistance. Of course, we could be wrong in our prognosis, so we need to also manage our risk. Now let me switch over to the actual options spread that I have constructed here. In this case, I'm going with very short-term options. Notice here I've only got 11 days to options expiry, and that's because in my forecast, in my prognosis, in my analysis, I believe that the move up is going to be a fairly quick move. So I've bought a spread, and I'm just going to scroll down here and show you that this spread actually doubles in value fairly quickly. So the position only needs to move up around 4%, depending on how long this asset takes to move towards that area. it only needs to move 4% for us to double our money. So in essence, we don't even need to get to our target of that 58 or 59 or even 60. If the position is above 55 before those options expire, we will in fact double our money. So that's what I'm looking for. Now 55 is actually just around the corner. So right now the stock is, well, this is an ETF. The ETF is at 53 from yesterday's close, at 53.10. So 55 is a fairly reasonable expectation over the next couple of days. Now you can see here that I've position sized this so that I'm not investing a large amount of money. That's because it's a fairly high risk trade. We've only got 11 days for these options before they expire. And therefore, I've only invested a small amount of money to limit my risk. Okay, so let's monitor that position, folks. We're only expecting the target is around that 59.60 area in DIG. The DIG ETF only needs to move up to slightly above 55, maybe around this 56 level in the next 2 weeks, I should say. It needs to, well, before 2 weeks, we only have 11 days to options expiry for us to make a nice 100% return on investment, which would mean we would actually double our money. So let's monitor this educational case study over the next 10 days or so and see how we go. Now, if DIG starts to trade lower, I'm not going to wait for my options to expire to exit that position. In fact, let's say, I would expect this 52 level here to hold. If it doesn't hold, then I'll probably exit my position. In fact, if you look at our options, I probably don't want to be in this position if the value of my position goes below 250, for example. Okay, so let's set that up as our trade plan. So just repeating, folks, we're expecting a move up in DIG, and we're using DIG because it moves a lot faster. You could also use USO, which is the other ETF, also following oil. So you could construct a similar trade using USO with an expectation of a 10% move up from its current levels around this $20 mark. But I'm going to use DIG for our educational case study and see how that goes. So again, folks, happy trading and always manage your risk.